Good morning, everybody. Sounds like we didn't have breakfast in this room, huh? Good morning. Good morning. Much better. Welcome to the neobanking panel session. My name is Kamami Michira from DLA Piper Africa, and I have with me a very exciting panel. We have Nico from Nala, we have Tobi from TeamApt, and last but definitely not least, we have Dan from Chipocash. I'm going to ask them to just take a moment and introduce themselves before we get on with the business of the day. Nico, do you want to take it forward?
Great, thanks so much for, thanks so much for...
I think your mic is not on.
Hello? Okay, great, thanks for the introduction. I'm Nicolai, I'm the CEO of Nala. So Nala is a fintech company. We started it actually in Tanzania back in 2018, and we started with a domestic payment product. And the focus was to create just a seamless experience and give sort of like a Monzo or a Revolut or a PayPal-like experience for mobile money that was running on USSD. So we grew that, went through Y Combinator in 2019, raised a little bit of money, and have continued to build our product. And right now we're focused on cross-border payments and building a digital bank essentially for the African diaspora who live in the UK, the US, Canada, as well as for folk who live on the continent. So that's a little bit about what we do. We have a consumer product and we're working on a business angle of this product as well.
Okay. Hi everyone. Hello? Okay. Hi everyone, good morning. My name is Tobi. I'm the Chief Operating Officer of TeamApt. TeamApt is the largest agency banking player in Nigeria. We provide banking services to the underserved, the bottom of the pyramid people in Nigeria. We also provide payment infrastructure for banks and other fintech companies, and we have a payment gateway as well. And we're transitioning into not just being agents, but actually providing banking services to some of the underprivileged, underserved people in across Africa, basically, both on the side of the businesses and on the side of the consumers as well.
Good morning. My name is Dan Tumuramye. I'm the country director for Chipa Technologies Uganda. Chipocash is a digital payments platform. We're in 9 countries in Africa, UK and the US. Our core competence is cross-border money transfers. Currently, we've just launched US fractional stock, so we're the first Pan-African company to democratize US fractional stock. So users of Chipocash can now invest on the top New York Stock Exchange companies through the app. We have investment, we do crypto, and we expect to launch so many products coming through, like virtual cards in this year. So Chipocash, for those who have not joined Chipocash, please join Chipocash. It's a very exciting company. Thank you.
Thank you very much. I think you'll agree with me that we could not have a better panel to look at the issues that we're going to be discussing this morning. So as I said, I'm from DLA Piper Africa. DLA Piper Africa is a leading firm. We are we are in 20 countries in Africa, and there are 400 lawyers at your disposal. We provide the entire spectrum of service. We are a full service firm, including fintech and regulatory practices. If you have a moment, please drop by We are right outside the stage, and we would welcome you to part. You will see we have a little golf course, and we are encouraging people to part for a purpose. We are supporting St. Christopher's Kitale, which is a school that is with 1,900 students that is looking to put up a borehole in rural Kenya, and we are looking to support this project. So if you have a minute, please do join us outside and try your hand at the parting. Now on to the business that has brought us to this venue this morning, which is looking at neobanking. Now, banking. For the longest time, we have all understood banking to be very serious business. When we think of a bank, we think of solid walls, brick and mortar, very serious security and everything that goes with it. Indeed, when you use phrases such as, you can take it to the bank and so on and so forth, it all just goes to demonstrate the solidness and the presence that we associate with the banking system. And suddenly, things are changing on us in the last few years. We're getting into a scenario where we are being told that a bank is no longer a place you go to get stuff done. Rather, it is a lifestyle. It is something that you do. And we have entities that are coming up to provide us the services without the need for the brick and mortar. And that's what we're referring to as neobanking. And to help us to understand where we are now going to be taking our cash or whatever it is that we do with the banks are our three colleagues. One of the issues we want to start understanding is exactly where we are in Africa. We are all familiar with the challenge of financial inclusion in Africa in whatever form, and the opportunities that technology has presented us to leapfrog these challenges and provide banking services to people. The advent of the mobile phone in Kenya, as well as other African countries, has really created an opportunity for people who would otherwise not have had access to this service to have it. And so I'm going to ask Nico to kick us off by just painting us a picture. What does the neo-banking landscape look like in Africa, Nico?
Yeah, sure. So a couple of thoughts. Something that's very interesting, right, is you might consider even some of the mobile money players to be the first digital banks. So if you think about, the digital banking landscape globally, the Safarikoms, the Airtels launched their mobile money play, and in some cases that was the early stages of digital banking, right? There was no brick and mortar. Sure, there were agents, of course, where you could cash out and get money out of the ecosystem, but it was essentially a digital bank of sorts. And since then, obviously, there's been a huge rush, obviously, in Europe with the Revoluts, the Monzos, the N26s, and even in the US now, a number of digital banks that are springing up. And something that we were talking about a couple of days ago when we were just chatting on the side was the interesting point that it seems like there's maybe fewer digital banks that are springing up on the continent relative to the rest of the world now. If you look across Asia and the US and Canada, Europe, of course. And just a few interesting pieces in terms of why that might be, I thought. I think one piece that is definitely the case. I think something that makes it so difficult to build a digital bank on the continent and do really a Pan-African digital bank is the regulatory piece. If you're building a bank, let's say in the European Economic Area, and you build in France, and you want to quickly launch that in Spain and some of the other markets, it's very easy because it's under one regulatory umbrella. Here, if you want to launch and you want to launch properly, you need to get licensed in every single market. And each of the regulators have their own small little nuances. And I think some of the struggles there, that we have to take into consideration as tech companies as well is, the requirement even for data centers, right? So if you want to get a PSP license, or if you want to get an e-money license, you actually have to have data centers on the ground. And in some markets, you have to have your primary, your secondary on the ground, and then of course you're probably building on AWS if you're a tech company, or on some other cloud infrastructure. And so just having those requirements makes it super onerous and difficult. The other thing maybe I'll just quickly mention before I'll hand it off is, building on the continent requires not only that you just build the consumer level and layer, you actually have to build the payment rails as well. So Revolut was able to build to billion-dollar company, and they are just essentially the top layer, right? They built on top of modular finance, which is the banking as a service platform. Here, yes, there are a number of companies who've made many strides, the Flutterwaves, the Paystacks and InterSwitches and other folk, but it's still very much necessary to build that infrastructure if you want to have reliability and you want to have a cost advantage as well. So that's just another challenge, is you have to build both the infrastructure plus you have to build the consumer level layer. So those are just a few of the challenges I think that come about when you're building, a neobank. That's not to say, there are a number of amazing neobanks that have popped up. The Eversense, Chipocash has done an amazing job in their expansion across the continent. Wave, a host of others. So, yeah.
Yeah, thank you, Nico. If I may just comment on that. So the infrastructure element, I think, is something that is reasonably within the control of the institutions that are looking to invest in this area. I do agree with you, the greater challenge that we're going to be facing as we go forward is that of the regulatory environment. Understandably, I know our regulators are working hard. It is always the case, and sympathetic to regulators because I have a little history and background in this. It is always the case that regulation always struggles to follow the market. In this particular instance, there are additional challenges in the sense that the traditional regulation that is undertaken by money regulators, being primarily our banking regulators, tends to be really economic, and then looking at the prudence of the institutions that undertake this business. Now you introduce technology, and it really does change the entire regulatory landscape and makes it imperative for the regulators to look at acquiring capacity that many of them may not have at this time. I mean, the regulators really will have to rise to the challenge in terms of upping their investment in capacity around technology if they're going to be effective. Our central bank here has recently issued digital banking regulations, and there is a sense in which you still see a bit of the overhangs of the banking system, looking at capital requirements and looking at, how the institutions are structured, and indeed insisting that a physical office still be required to be in place, which may be a little bit, I think, not in keeping with what it is that the market is looking at. So that's a challenge that we're going to have to continue to grapple with. The sovereignty issue, I think, is going to be a big one. How regulators are going to come to work together so that they can enable these entities to work across borders, again, is going to be key to the success, because the investment that is required to make these businesses work, keeping in mind that, typically I think the margins tend to be very thin. So scale and volume is absolutely critical. Regulators are limited to their jurisdictions, and so that's something that we are going to have to think about. However, having said that, I think there are precedents. The securities regulators have demonstrated to us that indeed there is a workaround this. They have very effective understandings, including a multilateral memorandum of understanding that enables them to work across borders. So we can only hope, I think, Nico, that this also happens in this area, and so, these companies that are enabling so many people to access these critical services are able to move forward. Let's take a moment to look at the area of what it is really that the customers are looking like. So just like the banking institutions are changing, so is the banking customer. And I think I'm going to ask Tobi to take this one away and just give us a sense of what the customers in this space are looking for. Tobi.
All right, thank you. So, typical customers, right? As digitization is happening in every other aspect of their lives, digitization is disrupting e-commerce, is disrupting restaurants. I can shop online, I can order a cab on my phone. And I think the question that customers started to ask themselves was, why can't this happen in banking, right? And the honest truth is there wasn't any real answer why not. The answer was, this is how we've always operated. And that was what opened the door for the neobanks to come in and do some real disruption, right? To create processes that were more in line with what the customers were used to, right? Because it's like, why do I have to come to the bank to get a card? You have all my information, just send it to me, right? But the typical banks, for some reason, were not keeping up with the digitization that was happening in every other aspect of the customers' lives. And once the neobanks came in and were able to start to solve that problem, and then they basically just took it and ran with it. And I think another thing is the traditional banks were, to an extent, taking advantage of the customers a little bit, especially in terms of pricing, right? There were a lot of costs that nobody could really explain, right? The customers didn't get it, but it was almost like an oligopoly where everybody is charging. So you as a customer, you can't really go from one to the other because the same charge is there, right? And I think that was another thing that the neobanks did very well in terms of addressing those phantom costs, right, associated with banking, where I'm the customer, I am your business basically, and you're charging me for being your business, which doesn't make sense, right? And so once they came in and addressed those phantom charges, the customers then, first of all, they understood that those charges didn't need to exist, right? And from that point on, they started to really assume the position of the customer being king, right? But I mean, so the neobanks, right, maybe some of them are taking it to the complete opposite end of the spectrum where everything is free, and I think that's another conversation entirely as to sustainability and profitability in the long run. But definitely they have opened the eyes of the customers to the fact that these things don't need to work this way just because they always have, and you as the customer are the prize, really. We all should be competing for you as against you just being there to serve us. And in terms of demography, yes, the millennials, the Gen Zs are more likely to try out the neobanks. But I did see some stats. I saw there was a European, so unfortunately European, not African, but there was a European survey where 7% of boomers were willing to actually try a neobank, right? And that's impressive. Of course, they also had the highest percentage, about 19%, who said they wouldn't touch it they wouldn't touch it at all due to the issue of trust. And that's why I really love what Nico started with, which is the very first neobanks were the mobile money people or the agency banking people, depending on the market. And I think one thing that they understood was just because you don't have a brick and mortar store doesn't mean you shouldn't have a touch point, because you need to build for each of those generations, right? Yes, 75% of the workplace is millennials and Gen Zs, and in 10, 20 years, you may not be worrying about banking the boomers anymore, but with every generation, and that's a mistake that the neobanks shouldn't make, because after the Gen Zs, there will be another generation that you have to build for as well. And so you need to keep on building for each and every generation to kind of make sure that you're giving them exactly what they want in terms of banking. Yeah.
Thank you very much, Tobi. Yes, absolutely. If technology has done nothing else, it's brought speed and convenience. I think some of our let me say neo-type banks, because I don't think we have a pure neo-bank in Kenya, are talking about banki mkononi, you know, your bank in your hand. It's all about speed, it's about convenience. So as far as the retail banking market, I think is concerned, it's very clear that neobanks will have an advantage. I really haven't had much discussion around what neobanks will or can do for the corporate customer. Do you want to make a comment about that?
Yes, absolutely. I think it was in terms of strategy to go after the consumers first, but I do know that a lot of the neobanks are starting to execute in the line of businesses, right? Whether it's SME businesses in terms of credit or in terms of giving them ways that they can collect money a lot easier. So yes, certainly the neobanks will start to execute more in the direction of businesses. I think the challenge that they will start to have as they go in that direction is the challenge of trust, right? Which is built over time, but because especially as you go higher up the ladder in terms of the large businesses and the corporations, right? You need to be able to prove that you're trustworthy. You need to be able to prove that you're going to be able to exist over time. And I think we can actually learn. We shouldn't be arrogant. We can learn from the conventional banks and some of the ways that they operate, especially in dealing with businesses, right? Different from the way they deal with consumers. You shouldn't throw the baby out with the bathwater. You should pick some of the good and add it to the way that you're executing in terms of going after businesses.
Very well said. And again, just tying up the point that Nico raised about the regulatory issues, the sense I have about our regulators, our central banks, is that they are sort of developing some level of confidence with the lending elements, and I mean with the lending elements, not so much with the the taking deposits
Exactly.
element. And so that again is going to be, a big issue that we will need to think about, and leading us up to the issue that Dan is going to grapple with, which is, as we struggle to build these banks, what does it mean in terms of raising funds? What is their sustainability? Are we going to be able to see them scale up to the same level that we have seen our traditional banks get to? Dan?
Yeah, thank you. Like other folks have said, neobanking is a new phenomenon in Africa. So if you think about the money movement flow, mainly in Africa, we're a predominantly cash-driven economy. So in that kind of mindset, building a neobank is becoming a challenge for most of the entrepreneurs in Africa, because they've been successful, neobanks have been successful in Europe, US, now Middle East and Asia. Africa, not yet. Like you said, in Kenya, you don't have a fully fledged neobank. Same with Uganda. So the main challenge here is the infrastructure development. So with the challenges that we have, mainly with internet penetration, for example, let me speak for Uganda. Uganda is a country where we pay tax on internet. So with such circumstances, building a neobank and spreading distribution for that bank is very, very tough. What the traditional banks have done is that they have created physical infrastructure to support banking. Now, back to the distribution between banked and unbanked, I think 57% of the population in Africa is not banked. Now, bringing that person into adopting a neobanking is a challenge. Why? Because the only parameters that all the services, financial services that we are offering as Chipocash, as Wave, Flutter Wave, is that we are doing the money transfers, the movement, the sending and receiving. But we're not having a fully fledged financial services that a person would get from a physical bank. So the challenge is that building the infrastructure, the cost of infrastructure is very high. First of all, like Nicole said, you have to build on top of other services for you to survive as a neobank. So government has to come through and support on neobanking, and also as the players have to push a lot of financial literacy to the people that are unbanked to make sure that they are banked. Now, do not forget that for you to survive, or for a neobank to survive, there are only two channels of delivering the service. One is the smartphone or smart device. Currently, for Uganda, we have 8 million smartphone penetration. Now, with a population of 44 million, you know that for you to invest in an infrastructure to survive in that economy is going to be tough. Why? Because that already has been eaten up by people who are doing mobile money, people who are doing traditional banking. So you have to, government has to work alongside the partners to build neobanks that will be, one, cost effective, because the customer that Tobi has talked about is very, very price sensitive. At Chipocash, one of the wins that we have is that we take care of our customer fees. Why? Because we want the customer to enjoy the services that we have in the application. So gone are the days where you sell price. You get it? So we're saying that, look here, you have to build a neobank. Yes, you're going to spend a lot of money to build the infrastructure, but you're going to take in recognition that the price doesn't have to be like the lead of what you're delivering. Then last but not least is the challenge is the mindset. If you, like Tobi said, the millennial and Gen Z, these youth, these teams, as part of this generation, we are the people who are adopting smartphones. But a person deep in my village, given the fact that he's comfortable having his cash and he's comfortable knowing that his money is in that particular safe in the bank, is a security mindset that these neobanks have to fight. Because we've seen security protocols being broken. We've seen hackers going to neobanks and fintechs. So this customer mindset has to shift gradually so that the adoption of neobanking has to come in. Now, before you build the infrastructure, you have to know how ready is your customer to adopt this product. So to me, those are the challenges. Of course, technology is moving fast-paced, because today, by a tap of an SMS, you can send money from the US to to Uganda with Chipocash. You can invest in new fractional stocks with Chipocash. But yes, that's technology. But who is going to use this technology when it lands in your country? So yeah, in a nutshell, I'm thinking about the challenges is infrastructure, mainly with internet, and the cost of building that infrastructure, the payment gateway that will hold the funds, and also plugging into the traditional banking, because it's not very easy to take away. Banks have been in existence for 100 years. It's not very easy to shift the mindset from a traditional bank to a neobank. So briefly, I think, and with that also, that poses a challenge to a venture capitalist, because what the funders look out for is what is the adoption of that solution you're bringing in that market. Now, if we are in Kenya and we don't have a fully fledged neobank, who will come from anywhere in the world to come and invest and put their funds into neobanking? You get it? So we need to pitch a successful story of neobank evolution in Africa to the funders so that they also get a feel. Either they come on board as partners in the building of the infrastructure, or they come, I know funders always like to come when you've survived the first 3 years or 5 years of existence. So, but for neobanking, it's going to be a challenge. Thank you.
Yeah, thank you very, very much, Dan. I think our panel has really assisted in opening up our minds on the issues that they're dealing with on the ground in terms of putting up this new business model. The one thing that none of them has mentioned, which I'm grateful, but I will, report myself in a sense, is also the need for the professional service that will support this kind of entities, the neobanks, including but not limited to, legal services, which we are here and happy to provide. As we look to wrap, let me just invite the panel to look into their crystal balls and tell us how they see the future of this unfolding. If I can just start with Nico, Tobi, and Dan in that order in terms of your closing remarks. Thank you.
Okay. So where will neobanking be in the next 10 years, 10 years?
Where will we be, yes.
Or where will we be? So I mean, I think there's no chance that it will only be neobanks that are going to just dominate, across the continent. I think, you have to acknowledge where traditional banks are very good. And I think, traditional banks still have this level of trust, that corporates really trust. So I think, when you're moving very large amounts of money, moving money via SWIFT or through some of these, older payment protocols, makes sense and it works okay. I think where it's very inefficient, though, where these big banks are very inefficient, and I think we only just started touching on that, is when you're moving smaller amounts and you want payments to be quick, you want payments to be cheap, you want to have a good user experience, a good portal, something that's very intuitive, and I think that's really where neobanks are going to make the biggest impact. And I think that will really hit, we touched a little bit on the corporates. I think there's a huge opportunity for neobanking for corporates across the continent. Just being a customer myself, right, of some of these bigger banks. And the challenges, the number of times that I can't actually log in even to the portal, or the times that I actually have to show up to the branch, to try to make a payment or to, authorize a particular document. Like that's not going to really work. And I think that's where neobanks can be really nimble. They can take on higher risk as well, which is something we didn't really talk about, but these startups have the ability to take on a ton of risk. And I think that's, as you look at sort of the consumer segment and you look at maybe small and medium-sized businesses, I think that's where neobanks have their sweet spot and they can really dominate.
Interesting. Tobi?
Yeah, just as Nico said, right, there's absolutely no chance that in 10 years we would have completely replaced the traditional banks. That's not going to happen in 10 years. It's going to be a much longer term play. In fact, I think what's going to happen is the customer is going to be the winner because the neobanks will start to drag the traditional banks into executing more in the digital direction. And I envision that there will actually be some acquisitions where rather than trying to execute in a space where they know they're probably not best equipped for, they will probably just go the acquisition route and just buy off some of the neobanks. So I think that's one of the things that I see that will happen. And again, just as Nico said, I do see some neobanks, the big players, the people who are going to be the big players in the neobanking space are going to start executing very well in the business direction. Because if you want to be institutional, you need to be able to bank the businesses as well as the individuals. So that's what I see coming.
Yeah.
Thank you, Toby. Dan?
Yeah, I think in 10 years, I'll speak to the customer. Since COVID, the customer is in love with remote services and conveniency. Yeah, so I think neobanks will survive in as far as retail banking is concerned, low volumes, because today even the regulators made it very loud that you don't do high volume transactions and velocity through neobanks or mobile platforms. So I think neobanks will survive in the retail space, mainly with the fact that they're convenient and remote services to the customer. However, I know the traditional banks are still going to survive because they are also fast-paced in building their technology, mainly for the EFT and RTGS services. So between, in the next 10 years, I know we have to have a collaboration or a mergers and acquisition in that space, just to make sure that the customer who is traditional and customer who is digital is all serviced in the next 10 years. Yeah.
Wonderful. I think this panel deserves a clap, wouldn't you say? Thank you very, very much to you all, to Dan, to Toby, and to Nico for sharing with us your experiences so openly. I can only say that the time has been short, so we have not been able to explore the other areas. In addition to the traditional services of money transfer, payment systems, there's another whole realm of services when you're looking at insurance, wealth. If we're talking about proper financial inclusivity, that neobanks have an opportunity to get at, and we can only wait to see how this unfolds in the next few years. Mine is to thank you very, very much for joining us, and again, to thank the panel for their time and for their open contributions. Thank you very much.
We're hiring. Come talk to me.